This is an accurate picture of all of us coming 6 p.m. today when futures open, following the quote-unquote trade war that Wall Street is now calling the tariff activities between the US and Canada. The last time we had a quote-unquote trade war was in fact in 2018, and the S&P fell about 20% before Trump backed off of the trade war with China. And if you guys are unaware of what has taken place over this weekend, Trump has announced a 25% tariff on Mexico, a 25% tariff on Canada, and a 10% tariff on China. We have not heard much about Mexico's response. They have vowed to respond in some way by tariffing us, but we have not heard anything yet. But Canada has already acted to enforce over $100 billion worth of tariffs on the US. Since these tariffs have been enacted, Trump says that pain from tariffs will be quote-unquote worth the price. Trump is calling for Canada to become the 51st US state once again. And Goldman Sachs says this morning, quote, "While the outlook is unclear, we think the Canada and Mexico focused tariffs are likely to be short-lived." Peter Burson on X says the problem with this view is that Trump won't change course unless the stock market sells off bigly. But the stock market won't sell off bigly if investors continue to think that tariffs will be lifted soon. Trump was recently asked by a reporter. The reporter said, "You promised Americans you would try to reduce cost." And Trump said, "Tariffs don't cause inflation. Tariffs cause success. There could be some temporary short-term disruption, and people understand that." Now, here in this video, I will explain what the real situation is with tariffs. No, they're not inflationary. If you think they're inflationary, I highly recommend that you listen closely to the next 5 or so minutes of this video. Because, yeah, the outcome will be the same for equities. Stocks will likely sell off, but not because of higher inflation. This will prompt the Fed to cut rates more than you expect, and certainly than Wall Street expects, because it's potentially going to be bad for the labor market. That's the real area that you should be watching. Now, first and foremost, it's important to understand that 77% of Canada's exports go to the US, and 84% of Mexico's exports go to the US. So both of them heavily rely on the United States. So Canada imposing a tariff is really just bad for Canada, right? Because, 77% of Canadian exports. So think about that. More than half, more than 3/4 of all of Canada's, external business comes to the US. So all those Canadian companies are now going to have to pay tariffs when they send out their product, because the easiest way to think about this is tariffs are paid by the company, or by the company in that country. So when the US puts tariffs on Canada, well, that just means if you're a cup company, for an example, or a baby bottle pop company. I don't even know who is the actual maker of this. Bazooka. If you're Bazooka and you make your product in the US and you sell it to Canada or whatnot, you're gonna be the company that has to pay the tariff. So in all actuality, Canada and Mexico are in no position to actually go through a trade war with the US. So from that standpoint, there's a lot of people that think these tariffs are just going to go away. And I would say that Trump has delivered on his campaign promises so far, deporting illegal immigrants, especially, criminals. That's happened. Getting tough on trade. That looks like it's happening right now. A lot of the promises made are being kept, at least up until now. I don't see a tariff going on and then a tariff just going off quickly like Goldman Sachs expects. Even Matt Gaetz, the guy that dropped out from being, I believe it was Secretary of State, or the treasurer, one of the two. He says, Canada won't win a trade war against the US. We can live without your sorry excuse for bacon. Now, I wrote this post on my X account. I said, here's why tariffs could crash the stock market, and it's not inflation. Let me explain. Inflation occurs when governments print money. When governments print money, people have more money to spend. In turn, consumers are willing to pay higher prices. Now, this is the simplified version, but essentially governments print money. It ends up in businesses. It ends up going out in wages. People spend more money, okay? That's essentially how inflation happens. Now, money supply is no longer increasing. After the last couple of years of inflation, consumers will not stand for price increases. If you are a tariff company and try to pass on the cost to consumers, they will buy less of your product. You can see this clearly with eggs recently. Eggs have skyrocketed. I'll bet my life savings on it. People are buying less eggs now than before. Now, eggs are a highly commoditized product, so it's a little bit different if you're comparing eggs to TVs, for an example. And there is kind of an argument to be made, like with toilet paper, for an example. Okay, if you are a premium toilet paper product and you charge more than your competition, you cannot, I repeat, you cannot go out and raise prices further and expect your demand to remain the same. That's just not how it works. If you're already charging more for other toilet papers and people are buying their, if your sales are pretty consistent, growing a little bit, whatever, average, business, you can't go out and raise prices further. What it could do, though, if you tried to raise prices, is really lead to people just trading down to less expensive, toilet paper, right? So your option is not raise prices. The option is for that premium toilet paper company to lay people off, to become more efficient internally in operations. So you can still pay the tariff, but you're not taking it in the margin because you're laying people off. You're becoming more efficient, so on and so forth. You could actually say this could be bullish for AI as well if that helps companies be more efficient. And now I say here, they're opting for cheaper protein instead, but with commoditized items, it's a little different, but again, the same idea. So if you're a company, you will be forced with really only two options. Number one, lay people off / cut costs elsewhere in the business. Or two, take the margin hit. Why? Well, if you raise prices and people revolt and buy less, well, you lose. If you don't raise prices but instead reduce headcount and become more efficient and potentially raise margins in the process, you win and keep costs lower for consumers. That's why tariffs are actually disinflationary. The real problem could be a weakening labor market, which unfortunately could be bad for economic activity and ultimately bad for the S&P. I say good. I'm glad we are now on the same page. And it's interesting because Wall Street is under the impression that companies can just pass these costs on to consumers. And that's not the reality of Main Street right now. Go out there and talk to people. Go talk to lower middle income average people and ask them how they feel about price increases. Ask them if they're buying more eggs. And I know eggs are a very, dramatic thing to look at. But people respond to price increases. Doritos, for an example. Great example of this. Doritos raised prices a lot in the past couple of years. But look at Doritos sales. They suck. They're terrible. What Doritos had to do is heavily discount, essentially giving back a lot of those price increases that they did. Frito-Lay, Pepsi, right? Company that owns Doritos and a lot of snack brands, has said, we cannot raise prices anymore. People will only pay $5 per bag of Doritos. And some people won't even pay that. Okay? That's why prices are not going up anymore on Doritos. They're at $5 a bag. What do you think Doritos is going to do with these tariffs? Well, they're going to have to take it in the margin, or they're going to have to reduce their staffing. They're going to have to, boost lower cost however they can. And it's not, they're not going to be able to raise prices on a lot of items. So that's the point I'm trying to make. Wall Street's going to be under this assumption that it's going to be inflationary, in which it will not be. It will be disinflationary. It will harm the labor market, which is ultimately bad for the S&P anyways. Like that's worse than a little bit of inflation, to have the labor market weaken in a dramatic way. And it will force the Fed to start reducing rates, probably in the next couple of months. Wall Street's going to realize, oh crap, tariffs are not inflationary. They're actually just bad for the economy. And that is potentially the opportunity you have in the heads up here. Because I guess stocks will crash either way, most likely, if it's presumed that a trade war is starting. I don't see an easy way out of this, as markets are near all-time highs. I think you have to get some pain here now in the markets. But ultimately, higher inflation's not going to be the outcome of this. It's going to be a weaker economy. Question is, does it push us into some kind of recession or not? Or does it just weaken GDP from, let's say, 2% to 1% or something along those lines? There's an argument for that, but we don't know exactly what that would look like. And you can see here from this article on CNBC, quote, "It doesn't have to be this way. Canada, Mexico, and China respond to Trump's tariffs." It says here, Mexico also vowed retaliation following news of the tariffs. Although President Claudia Sheinbaum did not reveal specifics, China, meanwhile, stopped short of an immediate escalation. Trump also did say if Canada retaliates against these tariffs, they could be boosted to 50%. So who knows what happens next. And Trump did say on Friday that he's not concerned about the market's reaction to tariffs. So he basically said, F your stocks. We're doing this regardless. And we will see if markets do throw a tantrum and stocks start to fall, how Trump responds to that. If they back down from the trade war, it doesn't seem likely to me at this point. I think at this point, these tariffs are probably going to stay on, but Trump's going to potentially demand other things as a negotiating tool to not raise the tariffs even further, because Canada and Mexico are handicapped to the U.S. The U.S. can do without especially Canadian goods. Mexico, that would be a little bit more difficult for certain industries. But the next round of proposed tariffs will be likely a negotiations tool. And it's also being reported by S&P that they estimate that the U.S. implementing a 25% tariff on Mexican exports would push the Mexican economy into a recession. The Canadian ambassador says Canadians expect our government to stand firm in trade dispute. They also said U.S. consumers should know retaliatory tariffs are not something Canada wants to do. And the Canadian ambassador says she is hopeful the Trump tariffs don't come into effect on Tuesday. Now, the Aluminum Association of Canada says Canada's aluminum industry finds unfortunate and highly disruptive the 25% tariffs announced by the U.S. administration. Now, you are already starting to see some of the effects from this. General Motors has dropped a production shift at an assembly plant that builds electric crossovers for Chevrolet, Cadillac, and Honda in Mexico. Ending the third shift will result in the elimination of about 800 jobs. So you're already starting to see the effect. Now, JD Vance, in a post on X, says Mexico sends tons of fentanyl into our country. Canada has seen a massive increase in fentanyl trafficking across its border. There are 3 ways of stopping this. The first is asking nicely, which we've done. It's gone nowhere. Now we're on to the consequences phase. And also in the news today, Ontario has canceled the selling of American liquors. They're taking them off the shelves starting on Tuesday. And it's already being said, according to Bloomberg, that these tariffs cover nearly half of all U.S. imports. This will create a material supply shock, will eat into growth, and be inflationary. Of course, I disagree with the inflationary aspect, but they say that we could be in a recession within 3 months, but we won't actually be labeled in a recession until Q3 due to the technical definitions. As you can see, crypto has already been selling off from starting this weekend at about $106,000 per coin, now down to $97,000 per coin. That is a pretty aggressive sell-off and a sign of what we can expect coming tomorrow. It's probably going to be a pretty bloody day coming Monday morning. And unfortunately, I don't think it's going to get much better until the markets do fall to the point in which, well, Trump really has to try to negotiate. Trump said he's not concerned about the market's reaction, and back in 2018, stocks fell 20% before Trump cared about the reaction in the markets. So I would brace for rougher times ahead. It could get nasty for stocks. So let me know what you think about this information down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.